Imagine a world where the very metal we overlook, the metal in our solar panels, in our smartphones, in the electric cars of tomorrow, doesn't just trade hands. It becomes the cornerstone of a global transformation. That metal is silver. The warning signs are becoming impossible to ignore, and anyone paying close attention to the underlying data can feel the pressure building beneath the surface. Silver is no longer just a commodity quietly sitting in the shadow of gold. It's becoming one of the most asymmetric opportunities in the global marketplace. When you look at the convergence of technology, energy transformation, and macroeconomic instability, the trajectory becomes unmistakable. Something extraordinary is forming, and the breakout many assume is years away may be much closer than anyone thinks. What's happening right now in the global energy transition is unprecedented. Solar capacity is scaling exponentially, and with every new deployment, silver becomes more deeply embedded in the infrastructure of future energy systems. Solar photovoltaics alone already consume a massive share of global silver output, and the demand curve is not flattening, it's steepening. There is no viable large-scale substitute today that can match silver's conductivity, durability, and cost efficiency inside these technologies. The world's push toward decarbonization is not optional. Economies are restructuring around it. And silver sits at the center of this structural transformation. At the same time, the supply side tells a completely different story, one defined by constraint, not growth. Silver mines are not scaling at the pace required. Many producers are dealing with declining grades, rising extraction costs, and regulatory pressures. Even more striking, a large percentage of the world's silver is produced as a byproduct of other metals, meaning increased demand does not automatically translate into increased production. Supply is constrained by forces completely outside the silver market itself. When you pair rapidly accelerating industrial demand with rigid or declining supply capacity, the imbalance becomes structural, not cyclical. This is the kind of setup that rewrites valuations. Layer onto this the macroeconomic backdrop, inflation that refuses to stay contained, currency volatility across global markets, sovereign debt expanding at unsustainable levels, and central banks maneuvering through uncertainty. In these conditions, investors instinctively gravitate toward assets that preserve value and hold purchasing power. Historically, silver has served as a hedge during inflationary cycles. But what makes the current environment unique is that silver is both a hedge and a critical industrial metal. It's rare to see a commodity play both roles simultaneously, and when it does, price behavior becomes far more explosive. This dual identity is why calls for a dramatic silver breakout aren't fantasy. They're grounded in the math of supply and demand, the physics of technology, and the behavioral patterns of markets. The market has not fully priced in the accelerating demand from EV, AI hardware, medical technologies, battery development, and the explosion of renewable energy infrastructure. Each one of these sectors is expanding, and each one requires silver in forms that cannot be easily substituted. This is not speculative hope. This is trajectory. When markets finally reconcile these realities, price adjustments tend to be sudden. They don't move gradually, they pivot sharply. Historically, silver has been known for violent upside re-ratings triggered by relatively small shifts in investor sentiment or industrial stockpiling. When structural forces are this strong, the catalyst does not need to be dramatic. It only needs to be recognized. Once the realization spreads through institutional channels, once the market internalizes the true supply deficit, once capital flows begin turning toward metals tied to exponential technologies, the repricing event could unfold far faster than the public expects. So when we talk about the possibility of silver reaching levels like $330, the question isn't whether it sounds bold. The real question is, what happens when exponential demand meets inflexible supply at a moment of global financial uncertainty? History tells us that markets eventually catch up to fundamentals, and when they do, the adjustment can be staggering. The breakout isn't a distant theory, the underlying signals are already pulsing through the data. And as these forces converge, the world may soon discover that silver's next chapter is far more transformative and far more valuable than anyone imagined. The most disruptive signals in any market are almost always the ones hiding in plain sight, the ones the world overlooks because they don't fit the traditional narrative. Silver is sending exactly that kind of signal right now. A quiet, powerful, data-driven warning that something is shifting beneath the global financial system and the technological landscape at the same time, and the extraordinary part, almost no one is paying attention. But those who do, those who see the pattern forming, are recognizing that silver's path toward dramatically higher valuations is not a fantasy. It's a possibility grounded in undeniable structural forces. Across the technology sector, demand for silver is accelerating at a pace we've never seen before. The world is undergoing a transformation driven by renewable energy, electrification, artificial intelligence, and advanced manufacturing. Every one of these breakthroughs depends on components that require silver not as an optional additive, but as a foundational input. Its conductivity, reflectivity, and efficiency cannot be matched. Solar photovoltaics are scaling exponentially, consuming more silver every single year. Electric vehicles require silver in electrical systems, battery connections, and onboard electronics. Data centers, which are multiplying to support the explosive rise of AI, require equipment built with silver-intensive components. These are not slow-moving industries, they are compounding. The signal becomes even louder when you look at supply. Global silver production isn't rising to match this demand curve. In fact, many mines are dealing with declining ore grades, and because most silver is produced as a byproduct of other mining operations, production doesn't increase when silver demand increases. The supply response is rigid. You cannot accelerate mining output by flipping a switch. The lag is structural, and historically, that kind of lag creates major price dislocations. We are watching a market where industrial demand is growing exponentially while supply is growing linearly, if at all. That gap is widening every year, and eventually markets must respond. Add to this the macroeconomic climate. Inflationary pressures are persistent. Governments are running record-level deficits. Monetary policy is tightening and loosening in cycles that signal uncertainty, not stability. Investors around the world are seeking protection from currency erosion and systemic risk. Traditionally, they look to gold. But today, silver holds a unique position, part monetary metal, part industrial powerhouse. That dual role is unprecedented in this magnitude, and it creates a scenario where investor demand and industrial demand can surge simultaneously. Historically, that's when silver has delivered its most dramatic price movements. Another signal the world is ignoring: above ground silver inventories are shrinking. Industrial consumers are drawing down stockpiles at a moment when mining supply is stagnant. When physical supply tightens in a market driven by both necessity and fear, price adjustments tend to be violent. And because silver markets are small relative to global capital pools, even a modest shift in institutional allocation could trigger outsized moves. This is the kind of asymmetric setup that often precedes re-rating events, the kind of events people look back on years later and say, the signs were there. What makes the $330 scenario possible isn't speculation. It's convergence. Convergence of technological adoption curves, supply constraints, geopolitical instability, and monetary uncertainty. When exponential demand meets finite supply, markets don't simply rebalance, they reprice. We've seen this pattern in countless disruptive cycles, from semiconductors to lithium to rare earths. Silver sits at the crossroads of two exponential trends. the acceleration of clean energy and the acceleration of digital infrastructure. That combination is catalytic. The shocking part is not that silver could reach unprecedented levels. The shocking part is that the data supporting this trajectory is already visible, and yet the broader market continues to overlook it. Investors anchored to historical price ranges are missing the structural changes redefining the metal's future. The world is focused on legacy narratives while ignoring real-time shifts in supply-demand mechanics. The signal is flashing. It's quieter than headlines and louder than speculation, and the few who recognize it now may be standing at the edge of one of the most significant revaluation moments of this decade. The movement has already begun. The signals from the market are already flashing. Silver is no longer waiting quietly in the shadows of gold or being treated merely as a safe haven relic. It's shifting, rising, and for those tuned in, the trajectory is unmistakable. Underneath the noise and the everyday headlines, a deeper structural transformation is playing out. What we're seeing now isn't hype or speculation, it's a realignment of fundamentals in favor of silver. Industrial demand is surging in ways few anticipated just a few years ago. In 2025, global demand for silver from technology, energy, and manufacturing sectors has reached record levels. Its role in solar panels, electronics, EV components, and semiconductors is expanding rapidly, making silver a cornerstone commodity for the green energy and digital infrastructure revolution. Kotak Securities +2 Sprott +2, that kind of industrial pull cannot be replicated by paper, promises this is real physical demand, drawn from real industries building the backbone of the future. At the same time, supply is showing no willingness because it cannot to keep up. Mining output and recycling combined are falling short of increasing needs. For several years now, the global silver market has experienced structural deficits, meaning industrial consumption and investor demand consistently outpace available supply. Metal +2, the Silver Institute +2, more than 70% of global silver output comes as a byproduct of mining for other metals, which means you cannot simply ramp up production when silver prices rise. That dynamic creates a hard ceiling on supply growth while demand ramps up aggressively. Further strengthening the shift is the changing global economic backdrop. Inflation, currency fluctuations, monetary uncertainty, all of these are nudging investors to look beyond traditional assets. Silver's unique duality as both an industrial metal and a store of value gives it rare leverage. It's not just a hedge anymore, it's a strategic asset with fundamental utility. IG +2, the Economic Times +2, what's happening now is subtle but powerful. Inventories are tightening, supply and imbalances are deepening, and industrial sectors are drawing more silver into real-world applications than ever before. Spot prices have reacted already. 2025 is seeing historic upward moves for silver. Upstock's online stock and share trading +2 alt alpha. SG +2 yet, markets and many investors seem stuck in old mental models expecting silver to behave like a cyclical commodity or waiting for some dramatic macro trigger to make it move. But this time, the move isn't just waiting to begin. It's already underway. The structural forces pushing silver upward don't need a dramatic headline to act. They respond to real supply deficits, to actual industrial consumption, to growing global uncertainty. When fundamentals are shifting, markets often surprise on the upside and quickly. So when you hear talk about silver to $330, what many dismiss as fantasy may actually reflect a real possibility. A future where the industrial transformation of energy, technology, and infrastructure collides with persistent scarcity. The move has begun. Silver isn't waiting. The market is quietly repositioning. The road to $330 silver is no longer a distant dream. The wheels are turning. The signals are flashing, and the momentum is building faster than most expect. Right now, silver sits at a unique crossroads: industrial necessity colliding with monetary demand, and the forces driving it forward have begun to align in a way that history has rarely seen before. This isn't about hype, hope, or speculation. This is about fundamentals converging toward a revaluation whose magnitude could surprise many. Across the world, industries are increasingly relying on silver to power what comes next. The expansion of renewable energy, especially solar, is surging globally. Photovoltaic demand, once a small fraction of silver's usage, has ballooned, and as solar deployment accelerates around the globe, silver's role becomes more central and permanent. Globe Newswire +2 PV Magazine International +2 at the same time. Electrification of transport and broader adoption of advanced electronics, from electric vehicles to AI-driven hardware to 5G infrastructure, all drive growing silver demand for wiring, circuitry, connectors, and other critical components. Kotak Securities +2 Crux Investor +2 in 2024 and 2025. Industrial demand hit record levels, confirming that silver's transformation into a backbone material for clean energy, digital infrastructure, and EV is not hypothetical, it's already underway. Sprott +2 Metal +2, but on the other side of the ledger, supply is not keeping up. Silver isn't like copper or iron, where new mines can quickly be built to respond to demand surges. Over 70% of silver output comes as a byproduct of mining for base metals, which means supply growth is decoupled from silver demand itself. That makes supply relatively inelastic. Silver cannot simply be produced on demand. The Silver Institute +2 Crux Investor +2 as of this year, the market has recorded its fifth consecutive annual structural deficit. Crux Investor +2 Crux Investor +2, that persistent gap between surging demand and constrained supply is the core of what makes the current setup so powerful and so rare. Simultaneously, macroeconomic and financial undercurrents are adding fuel to the fire. With global economic uncertainty, inflation concerns, and shifting monetary policies, investors are rethinking where value is stored. Silver, often overshadowed by gold, is gaining renewed attention, but this time not just as a precious metal, but as a dual-purpose asset, part industrial metal, part stable, value store. European Business Magazine +2 Gold Silver +2. This duality makes silver unusually attractive. Its value isn't solely based on speculation or sentiment, it's anchored in real physical demand. That gives silver a resiliency and upside rarely seen in metals. What's especially significant now is that many of the changes priming silver for a dramatic revaluation aren't in the future, they're already happening. Solar installations are growing, EV adoption accelerating, electronics and infrastructure upgrades ongoing, and investment flows into silver, backed instruments rising. Sprott +2 Crux Investor +2. Meanwhile, supply growth remains muted, mining outputs are relatively flat, and recycling or scrap supply can only fill a fraction of demand. The Silver Institute +2 Metal +2. When such fundamental imbalances persist, when demand accelerates while supply lags, and when structural shifts like green energy or electrification embed metal usage deep into global infrastructure, markets don't gradually adjust. They often reprice sharply, sometimes violently, and because silver's investor base remains far smaller than markets like equities or bonds, relatively modest capital flows or shifts in sentiment can have outsized impact on price. So when you hear talk of silver hitting levels once considered unthinkable, levels like $330, it may sound audacious. But when you look at the industrial transformation, the persistent supply deficit, the macro trends, and the reemerging role of silver as strategic infrastructure, metal, and store of value, that audacity begins to look like probability. The machinery is in motion. The structural forces are aligned. The move is happening, and for those watching closely, the road ahead might be far shorter and steeper than anyone expects.